In 2008, during the global financial crisis, an anonymous person or group going by the name Satoshi Nakamoto decided to shake things up. They introduced a revolutionary concept, Bitcoin. The idea was simple yet groundbreaking, a digital currency that operates outside the control of governments and banks. By 2009, Bitcoin was born, and the first ever block of Bitcoin, known as the Genesis block, was mined. Little did anyone know, this was the start of a global financial revolution. But why did Bitcoin come about, and how does it actually work? Stick around, and we'll break it down.
Before Bitcoin, people had tried to create digital currencies, but they all failed for one big reason: double spending. What's double spending? Imagine you have $10. If you send that $10 to two people at the same time, both might end up with your money. Not so cool, right? That's where Bitcoin shines. Using blockchain technology, Bitcoin prevents double spending by ensuring every transaction is verified and recorded across a decentralized network. This means no one can copy or counterfeit Bitcoin. Problem solved.
Here's the genius part. Bitcoin is decentralized. That means there's no single company, government, or authority controlling it. Instead, Bitcoin runs on a peer-to-peer network, meaning every transaction is verified by a global network of computers, or nodes. Imagine sending money directly to someone on the other side of the world without needing a bank or middleman. That's the power of decentralization. It puts control back in the hands of users like you and me. No middlemen, no gatekeepers. Price of Bitcoin, it's been quite the roller coaster ride. In 2010, one Bitcoin was worth less than a penny. Fast forward to 2017 and it skyrocketed to nearly $20,000, making millionaires out of early adopters. But then, just as quickly, the price crashed. In 2021, Bitcoin reached new heights at over $60,000, only to see another dip. Why the wild swings? Market speculation, global events, and even social media posts can send Bitcoin soaring or crashing. It's unpredictable, but that's part of the thrill. Bitcoin transactions are fascinating because they operate on a decentralized network called the blockchain. When I send Bitcoin, my transaction is bundled with others into a block. Miners then compete to solve complex mathematical puzzles to validate this block. Once they succeed, the block is added to the blockchain, making my transaction permanent and transparent. Each transaction includes a unique digital signature, ensuring security and authenticity. This means my Bitcoin isn't just floating around. It's tracked and verified by the entire network. The beauty of it lies in its trustless nature. No need for banks or intermediaries. Instead, we rely on cryptography and consensus among users. In just a few minutes, my transaction can be confirmed, and I can rest easy knowing it's immutable. This is the power of Bitcoin, a revolutionary way to transfer value without borders or barriers. Ever wonder where new Bitcoins come from? Enter Bitcoin mining. No, we're not talking about digging in the ground. Bitcoin mining is the process of solving complex math puzzles to verify transactions. When miners solve a puzzle, they get rewarded with newly created Bitcoins. Think of it like a digital gold rush. But here's the catch. Only 21 million Bitcoins will ever exist. As more Bitcoins are mined, the puzzles get harder and the rewards get smaller. It's a race against time. And that's what makes Bitcoin so scarce and valuable. Bitcoin wallets and private keys are essential for anyone stepping into the world of cryptocurrency. Think of a Bitcoin wallet as your digital bank account. It stores your Bitcoin, allowing you to send and receive it securely. But here's the catch. Your wallet is only as safe as your private key. This key is like a password. It grants access to your funds. If someone gets hold of it, they can take your Bitcoin without a trace. There are different types of wallets: software wallets, hardware wallets, and even paper wallets. Software wallets are convenient and user-friendly, perfect for beginners. Hardware wallets, on the other hand, offer enhanced security for those holding larger amounts. Always remember, never share your private key. Losing it means losing access to your Bitcoin forever. So, choose your wallet wisely, keep your private key safe, and you're on your way to navigating the exciting world of crypto. As we look toward the future of Bitcoin, it's clear that adoption is on the rise. Institutional investors are increasingly recognizing its potential as a hedge against inflation, while retail interest continues to grow, driven by the allure of decentralized finance. However, challenges loom large. Regulatory scrutiny is intensifying, with governments grappling to create frameworks that balance innovation with consumer protection. Additionally, scalability issues and environmental concerns surrounding mining practices could hinder progress. Yet the resilience of the Bitcoin network and its community suggests that it can adapt and evolve. As investors and analysts, we must stay informed and agile, navigating this dynamic landscape to harness the opportunities Bitcoin presents while being mindful of the potential pitfalls. The future is uncertain, but the potential for Bitcoin to reshape the financial landscape is undeniable. Recently, Bitcoin ETFs have been accepted by major financial regulators, marking a huge milestone in the cryptocurrency world. This means investors can now buy Bitcoin through traditional stock exchanges without needing to handle the cryptocurrency directly. A Bitcoin ETF tracks the price of Bitcoin, allowing people to invest in it just like they would in stocks. This makes Bitcoin more accessible to mainstream investors and adds a layer of reliability and regulation to the market. With the approval of these ETFs, Bitcoin is being seen as a more legitimate and reliable asset, which could attract larger institutions and increase overall trust in the cryptocurrency. It's a big step forward in making Bitcoin a part of the traditional financial system. Some of the world's biggest companies have started buying large amounts of Bitcoin, solidifying its role as a serious financial asset. BlackRock, the largest asset manager in the world, is pushing for Bitcoin ETFs, showing its belief in Bitcoin's long-term potential. MicroStrategy, led by CEO Michael Saylor, has gone even further, investing billions into Bitcoin, making it a core part of their company's strategy. Other major players like Tesla and Square have also jumped on board, holding significant Bitcoin reserves. Why are these companies buying Bitcoin? They see it as a hedge against inflation and a store of value, much like digital gold. With these big names backing Bitcoin, the cryptocurrency's credibility and demand have soared, bringing it closer to mainstream acceptance and solidifying its place in the global financial landscape.